First of all, I want to thank Warren Case for having us here today. This is a great space. We would love coming back here to share with you the space. And I'm going to introduce to you John Viterli, who is our member of the chamber and a partner here at White & Case. At this time, when global dynamics are shifting rapidly, the Brazil-U.S. corridor remains uniquely important, grounded in strong economic ties, deep cultural connections, and a shared commitment to innovation and growth. I think today's discussion is very timely and will explore both the opportunities and the challenges ahead, from investment in infrastructure to sustainability to technological transformation and overall the partnership between the two countries.
Thanks, Will, and bom dia a todos. Good morning, everyone. Welcome to our innovative Quorum Conference Center at White & Case. We're proud to be here for the 25th edition of the Brazil Summit with the Chamber, and to be here alongside Will, as well as the rest of the distinguished speakers and panelists and moderators for today that you can see all around here. It's quite a group. We have been at White & Case have been dedicated to Brazil and Brazilian clients and other clients with investments and interests in Brazil for several decades now, and it's Brazil remains a key pillar of us globally, not just for Latin America, but for really our global strategy as a firm. So we're really honored to host this event today as a further expression of that commitment.
It's a great pleasure to see you all from here. It's a pity that I cannot see many friends in person. It will be a pleasure to share with you half an hour of some ideas about Brazil. What I try to do is to give you a very optimistic, but at the same time realistic view about what's going on in Brazil right now. Well, basically, what I'd like to share with you is what will be the challenges for 2026 and 2027. Whoever wins the election, we are going to have a very challenging 2027. Basically, our situation now, if you talk about Brazil, is that we are not in a crisis. Brazil is not in a particular crisis if we consider what has been going on in Brazil for many years. But at the same time, we have decisions that must be taken. And along many years, Brazil has tried to adjust, but only partial adjustment. We have had growth without reform. We have had spending without discipline. We have had credibility without consistency in many issues. Our main constraint for next year will probably be the fiscal issue. Brazil has revenue. In fact, more than 30% of the Brazilian GDP now is going for taxes in Brazil. But we don't need as much control over expenditure as we need. At the same time, Brazil has a very high tax burden when we compare with other developing countries of the same level. And even the international crisis, they have brought some opportunities for Brazil. On one hand, you have more inflation because of the importation of diesel. Brazil still needs 30% of the diesel it consumes in spite of the huge oil production. But on the other hand, we have more incentives for ethanol, for electric buses, for biofuels. And ironically, the income for the government has grown because not only of the exports, the taxes on exports, but also because of Petrobras dividends. So even the international crisis brings some interesting opportunities for Brazil. So we know what has to be done when we talk about Brazil. We know that we need to restore fiscal credibility. We need to reform the public expenditure, not only revenue. We need some reinforcement of institutions, although the Brazilian institution has resisted many tests in the last years, much better than other Latin American countries and even developed countries. We can use trade policy as a growth engine. We have a plausible scenario in spite of that. Is if we don't do these measures as priorities, like the fiscal issue, for example, is that in the worst situation, we are going to have a small growth. We may have that, but inflation will probably be under control because of the central bank, and structural reforms will be very slow.
Anyway, good morning. Thank you for being here. Thank you, John, for hosting us. It's really a wonderful spot. It's really a good time, as always, to discuss what's going on in Brazil. As we are all aware, this is a critical political year, and the political season has started in full. And this forms the background for most of macroeconomic thinking, not only this year, but into what brings in the new administration.
Thank you so much. First of all, thank you for the kind introduction, and thank you to the Brazilian American Chamber of Commerce. As Dr. Welber Barral mentioned, we are in full electoral mode. This is unusual because, according to electoral law, the campaign would only officially begin in August. However, Brazilian politics has seen a trend of growth of the pre-electoral debate period, which leads to a certain level of parliamentary paralysis, where the country is waiting on the election decision, and a lot of more complex political negotiations stall in this pre-electoral period. I think one of the most important points about this election is that this election is a sequel. And what I mean by that is that it's a continuation of a complex political dynamic that has been years in the making. So it's the kind of sequel where, if you haven't seen the first movie, it's tough to know what's going on. So to understand it, we need some context. We have two very clear front runners in a highly polarized election. And I think if we go through a little bit of context for each one, we'll end up learning a lot about not only the current dynamics, but Brazilian political dynamics at the macro level, which is, I think, interesting in this context. The dynamics between the branches of government in 2026 are completely different from what they were in Lula's first two terms, what they were in 2022 and 2006. The presidency is far less powerful today than it was in Lula 1 or Lula 2. 20 years ago, we were operating under a hyper-presidentialist model, where the executive branch had control of the budget and could build and maintain stable congressional majorities that would give it the support it needed to approve its agenda throughout the administration. The executive branch, since Lula's first two terms, has atrophied. And in the wake of that atrophying power of the executive branch, the legislative branch has advanced. On the other side, we have Flávio Bolsonaro. Flávio Bolsonaro is a federal senator. He's the eldest son of Jair Bolsonaro, and his candidacy is loaded with meaning from the start. Jair Bolsonaro, his father, is currently in prison. He's actually under house arrest temporarily for medical reasons, but he was tried and convicted for an attempted coup d'etat, which, as Dr. Welber also alluded to, importantly, our democracy and our institutions survived. Bolsonarismo signaled a conservative turn in Brazilian politics, filling a spot that I think was made right by the Lava Jato era and the vacuum that was created from the Lava Jato investigations. Flávio Bolsonaro presents what is designed to be a more moderate version of Bolsonarismo, but one that is aligned with his values and the values of his father nonetheless. The candidacy was designed to keep Bolsonarismo in control of the right and the center-right in Brazilian political discourse. And I think that is clear given the fact that Tarcísio, who is the current governor of São Paulo and was widely considered to be the strongest candidate to face Lula, hypothetically, something which Flávio himself has publicly admitted to, could not provide the same level of loyalty to Bolsonarismo as a movement to secure the support of the family in key moments. Also, it's important to realize that for Tarcísio to run for president against Lula, he would have had to have given up his position in the re-election, which is pretty much a sure thing re-election as governor of São Paulo, for a very close presidential election, which would put his political future, at least in the short term for the next 4 years, at risk, leaving him without an elected office. Is there a possibility that a third way could gain strength? And the answer is it's not simple, because on paper, there seems to be space. As Welber mentioned, rejection for all candidates is incredibly high. ARCO, in partnership with Atlas Intel Polling Institute, we ran a poll specifically focused on the issue of rejection. And we looked at the 13 possible presidential candidates, including even Jair Bolsonaro, including Eduardo Leite, Ratinho Júnior, Romeu Zema, people who are not necessarily in the front runners nationally. And we found that all 13 of the candidates had rejection ratings of around 50%. So when voters were asked, out of these candidates, who would you not vote for under any circumstances? Each of these candidates received a 50% rate of, I would never vote for this candidate. So the rejection signals that there seems to be space. However, the personality has not appeared. The individual who could break through this polarized environment has not appeared. And it seems that we are moving towards yet another highly polarized, very close election that will be likely won by razor-thin margins. But again, a lot could happen.
Before the war, the Iran war, we were already witnessing some diversification of investors and the real economy away from the United States. Not fully. I don't mean the dollar will lose its value as a reserve currency, debasement. I don't believe these stories. But I was clearly seeing, and I benefited a lot from these views at the World Economic Forum back in January, some strategic diversification of Europe and Asia in 4 areas: defense, technology, trade, and energy. So these 4 areas, I saw a huge demand of Europe and Asia to diversify away from the U.S. and to some extent create this more of a let's say multipolar world. This is the general idea. It might be right or wrong, but the view is, or the consequence is, except for defense, Brazil can offer a lot in terms of clean energy, either also on oil, for example. We can discuss that. Brazil offer somehow a neutral diplomacy, a neutrality on our diplomacy that helps a lot global trade. And finally, on technology, we are being the destination of these data centers that are so important for AI. That was before the war. Then came the war. And the war highlighted how the Brazilian economy is, to some extent, resilient to the oil shock. Brazil today produces more oil than Iran, for example. We produce around 3.7 million barrels a day. I'm not including the potential exploration of what we call equatorial margin. It's the basin of the Amazon River. If we include that for the future, Brazil can produce around 5 million barrels a day. 5.5 will be close to Canada. So during the war, and it's still not over, but markets and investors realized that Brazil can be a type of safe place to receive these investments and to be part of the diversification of all these investments that I just discussed. So trade, energy, and technology. If you look at the economy right now, we are facing the lowest unemployment rate ever. This is on the back of many factors. I don't have much time right now to explore, but I'll be more than glad to explore these things during the Q&A. So the low unemployment rate benefits from previous labor reform, pension reform, the platform workers, so Uber drivers, iFood delivery drivers here in Brazil, they deliver through with their motorcycle sales are at a record high in Brazil. So this very low unemployment rate before that. So not only we have this lowest unemployment rate ever, but we also have a very decent result or operational result of companies in Brazil. Corporates are benefiting a lot from this low unemployment on their revenues. But there's a paradox here, if I were to stop my conversation right now. What is the paradox? The paradox is this low unemployment and all these, let's say, profitability of companies, they are not translating into higher consumption and also into higher investments. To the contrary, consumption fell in the second half of 2025 in Brazil, and investments fell quite a lot in the second half of last year. Almost the entire 2025 investments fell. So how do we reconcile this view? A low unemployment, operational profits doing quite well, and low consumption and low investments. The way to reconcile that is through indebtedness. So families are carrying a lot of debt, and corporates are carrying a lot of debt. With interest rates right now at close to 10% in real terms, this is a big weight on the shoulders of families and companies. And this probably feeds into what Michael was saying just before about how consumers perceive the government. We have the lowest unemployment rate ever. Inflation is under control. I mean, Lula will claim he will have the lowest inflation for a mandate of a government in 30 years, maybe 50 years. And despite that, this is not translating into higher approval rates. If we do the fiscal adjustment, this is the big crisis that could emerge in Brazil after the election. So if we do the fiscal adjustment, we get rid of the risk of a fiscal crisis, then the Brazilian economy could grow around, let's say, 2 to 3% per year, with real rates around 4 to 5%. And this is a transformational story for, let's say, for the next 4 or 8 years of the mandate of the next president, for the value of companies. So unlocking a lot of value, market value of companies, collecting the benefits of the diversification I was just seeing. So it is definitely in our hands to take these decisions, in our hands as a society to take the decisions to address the fiscal for Brazil to be, let's say, a normal country. We will not be growing more than the global economy, but growing aligned with the global economy with, let's say, decent real rates around 4 or 5, inflation around 3-4% is certainly transformational for the next 10 years of Brazil.
So thank you very much, Paulo. Thank you for the invitation. It's a pleasure to share this panel with you, with Drauzio, Michael, and Fernando. Always difficult to speak after Fernando because I agree with almost everything that he said, but I will try to give my perspective. This has been a time of extremely high uncertainty. The outlook has been changing very quickly in the global economy in the last few weeks. We are definitely facing a very substantial negative supply shock. And the immediate consequence for the global economy is clear. Essentially, energy is a very important input for the global economy, and it became suddenly more scarce. And this means that we are going to face more adverse trade-offs between inflation and growth, and the global potential output became smaller as a consequence of the shock. Of course, there is a large uncertainty about the extension of this conflict.
Starting with one number that I think it's quite good at summarizing the big chunk of the picture, which is FX. It is F5. It's a benign outcome. Given what's going on in the world and in Brazil, no one can say it's not a benign number. So it reflects the summary here. If you put on your AI summary, say, yeah, BRL at 5 and say good. And why? I don't think it's that much because of Brazil as an exporter of oil, because it is in line with the performance of Chilean peso, which is a big importer of oil. It has to do with, I think, two things. First, of course, people like 15%, 14%. And I sound like a broken record, talk about that over the past year. It's a good investment at 15%, given that no one really knows what elections will turn out to be, good or bad. So people say 50-50, 50-50 receiving 15%, great. Also, again, you look at the dollar and the global environment, the dollar has been weakening, but it's been weakening for everyone. So when you look at BRL, why it's performing in line with the Mexican peso, with the Colombian peso, just looking at the peers, and the Chilean peso is an oil importer. Well, because the dollar is weak. The dollar is weak, growth is okay, rates are very high, and we don't really know what's going to happen on the electoral front. But I think at 5, you start to see some signs that markets are enthusiastic about the prospects of change politically. And there's where you have to be a bit concerned, because I think it's too early for that. It's true, there are many scandals unfolding. So Michael mentioned the master bank, INSS, and what's going on in the STF. Bear in mind that Lula realized that he didn't have Congress, so he decided to pick a few names for the Supreme Court and run the country with the support of the Supreme Court. But now the Supreme Court is under attack. So all powers have been very weakened. The executive with all these impeachments, Congress later on with all the scandals, and now the STF, Supreme Court, with all the scandals. So there's, as much as it could continue to hurt Lula, I think a big chunk of the current weakness in his popularity has to do with external factors as well. If you look at all these scandals that I mentioned, they have been in the press for a full month, more, but every single day, and it's relentless. So how much worse can it get in terms of his popularity when it comes to these scandals? I don't know, maybe not much. The external, we also probably are at the worst point in terms of oil prices, inflation, prospects for growth, etc. So what I would say is that don't extrapolate those recent months and probably what's going to happen over the next month to October, November, because we may be in a better place there.
Thank you, Drauzio. Thank you. I thought that it would be appropriate at this time, since I know we are very far away from the election and from the next administration, but it's been clear that we've focused all on the fiscal problem, and that in some sense either the market will adjust through inflation, which we should remind ourselves it's a really damaging way for society to face a fiscal adjustment, because the inflation tax is very regressive and it's also very disruptive. Or we will see some movement towards a policy-led fiscal adjustment. So I would like to take the last 15 minutes that we have to sort of go around and ask people in the panel what they think should be done or would be done beginning in the new administration.
But first of all, I want to take the opportunity to thank not only White & Case for again hosting us here today, but also our platinum sponsors, Vieira Advogados. Thank you so much for being a platinum sponsor, Latam Airlines, and Resecurity. So thank you. We're always very thankful for our partners for joining us in these events. So I just wanted to make sure that we highlighted that. And as always, I want to also thank all our staff from the chamber who's here today, always working very hard. They have a small job ahead with the POI coming up, but they always manage to have these great events for us as well. So, guys, thank you so much for everything that you do for us.
So thank you, everyone, for joining this panel. Thank you for the chamber. And congrats for everybody in the last panel, really fantastic about talking about the economics of Brazil. And here we have two topics together. One is trade, and the second is finance. Two topics for Brazil, very dear to Brazil, very dear to me. I just want to start with a few notes about Brazil and trade. Brazil is a powerhouse in soft and hard commodities. We are lead exporter when we talk about soft, soybeans, corn, sugar, coffee, and then hard commodities now with the critical minerals. We are able to play a big role in this area. And so if we just take in numbers, Brazil, the trade of Brazil annually is around $600 to $700 billion every year. So it's $600 to $700 billion of exports and imports that will bring direct lending, will bring export prepayments, will bring import financing, will bring equity investments, and will demand governments to take a position to even have it double, triple this number. But even have a big, very relevant and bold number in terms of trade, Brazil represents, and then Roberto may correct me, between 2 and 3% of the global trade. Might be a bit different, but it's nothing compared to our potential. And we have a lot of challenge to make that percentage higher. So given this, the current scenario of 2 wars happening, and you have the tariffs, how it impacts the Brazilian trade? I'll start with an easy one. The other ones.
Yeah, well, thanks for that. Well, good morning, everyone, and it's a great pleasure to be with you all. And if we're answering that question, I think the first step is to look at where we are. So what is the environment that we're in at this point in time? And clearly, the world that we live in now is unprecedented. And I've had a pretty long career in trade and the diplomatic corps and in the private sector as well altogether. I have never experienced a situation like this. What makes it different? What makes it different at this point is 2 things. Thing number 1, unpredictability. The level of unpredictability in global relations is unprecedented. And you may look maybe 200 years of history, we have never been at a point where we are now. And coupled with this unpredictability is the fact that the legal framework where we operate, where we all operate, companies, law firms, capital investors, there is always some degree of understanding about what the rules are. And now we don't have that. All of the multilateral institutions, I would say, right now, I think the IMF, the Bretton Woods institutions are still okay, barely. The World Bank, IDB, IMF, let's put the WTO to the side for the moment. That's another Bretton Woods institution. I mean, those are relatively okay, but the rules of the game, particularly in terms of trade, they have been thrown out of the window. Basically, everything that we see today, even the relationship between Brazil and the US, has no relation whatsoever with the rules that we agreed to after the war in 1947. So, this is a new world. Where does Brazil fit in? I think that's the question. And I would say pretty well, actually. Pretty well, because at this point in a highly unpredictable world, What you do want is to diversify, is to find different partners, partners that are low risk. That's the preference. So, and Brazil fits precisely there. First, it's a low-cost, highly efficient producer and exporter, and the Brazilian exports are going up quite significantly, and not by accident. It's because in some sectors, not everywhere, mind you, in some sectors, particularly the agribusiness and commodities and low complexity industrial sector, those are going up. And the other thing is Brazil is relatively, if you compare it to American politics, it's kind of a swing state. It could go either way. So there is no automatic alliance with one side of the geopolitical arena, nor to the other side of the geopolitical arena. It can play both ways. It doesn't necessarily focus or feature as a hot spot on the radar of those who are promoting a lot of the unpredictability that we see today.
Lucio, thank you. Thank you very much for the invitation also, Will. Fernanda, thanks for the BMJ. Barral was here. Now I'm trying to sum up a little bit of the thoughts that we have. And I have to, I don't know, slightly disagree a little bit about the trade diversification. Because although we're trying to diversify a little bit, we, as a trade partner or as a trade as a whole, a trade player in the world, we have a trade concentrated within China a lot. 30% of all that we export goes to China. And this is so important to highlight because it's so concentrated within commodities. And we know that we don't control the prices of the commodities, so it's an urgent need for Brazil to diversify, of course, in terms of partners. And again, we are trying to do that. If we see what is happening nowadays in Brazil, we are exporting more to India, to Indonesia, to European Union, and I think we're going to export more because of the trade agreement. Of course, this is one of the highlights that we need to the path that we need to follow when you have a trade agreement. Of course, diversify and try to sell more. But again, I would pinpoint that this is an important issue in Brazil, how you break this concentration of trade that you have there within China and diversify within China for sure, because again, 1/3 of everything that we export goes there. And a strategic partnership for us, for sure. In the United States, because if you take a look, for example, in the back of 2001, 2002, the level, and before joining you guys here today, I was in the spring meetings in IMF, Monday and Tuesday in DC, and everyone there seems to have this opinion that, consolidated opinion that we are living in a world with high debt, low growth, and of course, a lot of trade tensions. And how do you grow in an environment like this? And Brazil, for me, is a case because is an interesting case because when you take, for example, a look in trade, which is we are discussing right now, the quality and the density of your trade balance is so important for you to grow. And I'll pinpoint, for example, I'll highlight the trade relation that we used to have in the United States. Back in 2001, 2002, the United States was our first partner in terms of trade. 21% of everything that we used to export went to the United States. And the quality of the trade balance, the level, the high level of inputs, the high level of outputs, the high level of products, technologically speaking, were so high. So we downgraded in terms of that, in terms of not only quality. I'm not saying that agribusiness sector is not quality. Of course, it's qualified, but again, we have to diversify the products.
Given the current this situation where we're living now, Nancy, we were saying we talked yesterday. You have to sell Brazil to your investors. So how foreign investors are looking into Brazil? In the scenario we are living in now and what is coming up next for the coming years. As Roberto said, it's a question mark. We are living in a no-rules world at this point, right? So how you navigate from a investor-lender's perspective?
Sure. Well, I think Bruna said it right, that Brazil is far away, and it's certainly far away from the U.S. institutional investor perspective. So Amara's job and my colleague's job is to educate. We spend a lot of time educating, some at a very remedial level and some at a more sophisticated level. Amara itself is a food and agribusiness, primarily private credit manager. So we spend a lot of time talking not just about Brazil and geopolitics, but the food and agribusiness sectors and how to invest in those sectors. And when you look at Brazil with such a vast wealth of agricultural resources, I mean, that's where the arable land is. How can you be an investor looking at the food and agribusiness space and not be in Brazil? And that seems very simplistic, but sometimes difficult for the, particularly the US institutional investor to grasp. And just a couple of statistics, and this relates to the asset management business, but the number, and just in food and ag, the number of food and agribusiness managers has increased 640% in the last 15 years. That's enormous growth. And of the amount that is invested in food and agribusiness, 7% is invested in all of Latin America. 7%. So if you take Brazil as a subset, that's even less. It's probably the largest subset, but even if it's 5%. So food and ag investing, Brazil is 5% in the asset management space, and that includes farmland, that includes equity, that includes credit. To me, that's where there is a tremendous opportunity. These sectors for investors are underinvested, and as asset managers bringing capital into the space, we have to find those opportunities to really to showcase what an investment in Brazil can do.
If Nancy can keep educating, it's going to be fantastic for everyone investing in Brazil. I mean, it's amazing to see. I think from a general financing perspective, investors kind of understand Brazil risk. We've seen big players in the space go out recently in the last year. I mean, JNF this past week as well, raising debt capital markets money. Vale, as Bruno was talking about, raising, I think last year, $750 million. I think the Brazilian market is open, and I think large investors do appreciate the risks. I think it's a very structured financing platform. I do agree with Nancy that the one resource that it has, the food and agribusiness, it should be plentiful, and people should be putting in the money in Brazil. From a pure financing structuring perspective, investors understand, the general geopolitical risk of Brazil. I think there were a lot of tax reforms over the last couple of years as well to allow Brazilian companies to raise money internationally. I think those will play out over the next couple of years as well. And I think, if I have to say the downside, people understand what the downside risk in Brazil is. For better or worse, there have been a lot of restructurings in Brazil. And now people understand what would happen in the ultimate downside, and they're getting more and more comfortable. A lot more education is needed. To be frank, we're having a couple of those discussions now with both creditors and companies to understand that. But I think from a pure sort of macro side of things, from a financing perspective, investors appreciate that Brazil is there. And notwithstanding, Ambassador, the unpredictability of the world right now, I think the benefit is it's happening everywhere.
So I'm also concerned about the 301 section, but in more general terms, I think the relationship is living a moment of managed volatility. And what the tariffs events exposed very clearly is, one, how interconnected a lot of our economies are and how invisible that is. I don't think a regular American or even the ones who made the decisions for those tariffs needed how much of the American breakfasts rely on Brazilian products. Just for you to, a data point that for me was really impressive to learn is that more than 80% of the paper pulp, the eucalyptus pulp that is used to produce toilet paper in the United States comes from Brazil. So those, I think, how intertwined our industries are, it was still invisible, and it's very important, and that the private sector, that you all come to DC and interact with policymakers to expose that importance. The second thing is, in terms of managed volatility, one thing I feel is that every player in the region is right now pricing in the political volatility of the United States. So everyone is pricing in the risks of new tariffs coming, even though Trump no longer has the broader instrument to apply that because of the decision on the Supreme Court. He has others, and it's a way that it's an instrument of power for this administration. So I think how the region is pricing in this is important for us to assess. And more broadly, I think at the same time, Washington understood that they need chicken nuggets from Brazil and coffee and pulp for toilet paper. They also understand right now that they want to work closely with Brazil and with the strategic supply chains, especially critical minerals. But right now, there is a lot of animosity politically going on. So setting that aside, and if nothing changed with Brazil's election, I foresee a relationship that's becoming more and more selective, that there will be frictions coming up politically, but it's going to be more and more selective and project-based, focused on what is critical for the United States and for Brazil right now.
Sometimes we see companies in Brazil, they're trying over time. Brazil was known like 15, 20 years ago to be very opaque companies, not being transparent, not be audited. So that I think changed somehow, and companies became more transparent and transparent to investors, to lenders, and so. But what's still missing? You have done several transactions in Brazil over the years. Some transactions, restructurings, and enforcement, so you know them all. What's missing for Brazilian companies to have access to a broader financing, to more capital from funds and financial institutions just like you?
I think that's an excellent question, and one that...
Thank you so much.
Of course. I think the biggest differentiator between those companies in Brazil that tend to have access to foreign capital and even local capital is the most important capital of all, and that's human capital. What you find in many of these markets, particularly in food and agriculture, and not just in Brazil, is that you're dealing with multi-generational, family-owned companies that suffer from the problems that all families suffer from. Disagreements in what the future looks like. How are we going to define our legacy? Someone was speaking about legacy earlier. What do we want to be? Do we want to be institutional quality, or do we want to be a family-owned business? And one of the things that we as a lender focus on, not just lending the capital, but also helping as an advisor to bring many of these agricultural companies into a more professionalized, sophisticated, mature C-suite, if there even is a C-suite. We need professional CFOs. We need professional ag business managers. We need consultants who can actually opine on risk. So first, human capital. Second, risk management. Farmers are very, by nature, optimistic. Price is always going up. Yields are always going to get better. The world is looking good despite all of these trade dislocations and challenges that we face. But at the end of the day, making investments is about assessing risk and assessing that risk against the potential upside for the investor or the bank or whoever it is putting capital. And I think in general, and maybe this is a sweeping generalization, Brazilian companies tend to focus on the positive and not spend enough time on the risks. So we, as the underwriters, do focus on the risk. So really understanding foreign exchange risk, understanding refinancing risk. The Brazilian financing arena, it really tends to be in a box. The Brazilian banks do export prepayments, they do ACCs, they do certain things extremely well. But if you get outside of that box, the opportunities to raise capital get much slimmer. And that's where alternative financial providers, non-bank financial institutions come into play. So understanding structuring better, understanding risk management better, and coming up the human capital chain, I think are some of the main factors that we look at when we're analyzing risks.
Thank you very much. Thank you very much for you to taking this minutes. Congrats for the event. Thank you.
Well, thanks everybody for sticking with us. It was another great panel. Thanks everybody for being here, and I hope you enjoyed a great morning here at White & Case. And we look forward to seeing you at another event from the Chamber, and of course, a small little gathering that we're going to have in mid-May here in New York to celebrate the Persons of the Year. So thanks again for being with us, and see you again soon. Thank you.